In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, IBM taking center stage at the Consumer Electronics Show. We will speak to CEO Ginny Rometty about the company's next steps in AI and quantum computing. Plus, tech pain spreading as Samsung shares Apple's misery, blaming the China slowdown hitting demand for smartphone chips. And SoftBank investing another $2 billion in WeWork, but it's a lot less than the $16 billion SoftBank planned to spend on a controlling stake. We will dig in to why. First to our top story, CES, the world's largest tech expo, is underway in Las Vegas, and Tuesday's opening keynote was delivered by IBM CEO Ginny Rometty, who highlighted what she believes is coming next for AI. Data and quantum computing. Rometty also talked about how it is impacting business and their clients as big and diverse as Exxon and Walmart. We spoke with Rometty after she delivered her remarks at CES and talked first about IBM's relationship with Delta.
We just had a great conversation with Ed Bastian at Delta, and we've done a lot of work together, and it really boils down to all the different ways you could make the flyer experience better. So it's everything from recognizing who you are and your history without you saying anything. So if your flight is canceled, all the work we've done to build a really strong data lake and all the AI to then say, not only here's the flight you should take, but even to predict what is the right kind of compensation for the right kind of situation. And then at the other end of the spectrum, it's maintenance. And then the other side of it, we had a big announcement today on weather. As you know, we own the weather company, and this was a huge announcement about the most accurate local weather. And we'll be able to predict turbulence an hour in advance. So think about that too, both not from a safety, but as well, if I'm a pilot, fuel, and being able to have a flight path that instead of the flight, captain coming on saying, let me look for some smooth air, that's known well in advance. So we covered everything from impact of weather, which, by the way, impacts, it's the #1 factor on all industry, weather to customer service to maintenance and operations.
Now, when it comes to AI, on the one hand, there's concern from people like Elon Musk about an AI apocalypse, about AI threatening humans. And then on the flip side, there's some who say that AI isn't living up to the hype, isn't living up to expectations. Which is it?
Yeah, I don't think it's either of those, to be honest with you. I got a chance on stage to cover and really sort of give people a way to look at AI in a broad spectrum. If on one hand, what people talk about when AI is like a human brain, general AI, that's decades away, if at all. On the other end, some of the AI we have today is very what we call narrow AI. It does one simple thing, does it great, but that's all it does. And so is that an issue of expectations, or that's just what that does? What we introduced today is to get the world thinking. The next level is something called broad AI, where think of it as this. It's the same. One domain, one task is narrow. Broad says, hey, I'm in a domain, but I can learn something next to me. So if I'm an insurance company, right now, I train my claims on all the roof types of the world. I have to do a lot of training on that. Broad AI says, okay, I've been trained on roofs. If one is hit with hail, I can recognize that across all the rest of them without more training. This, to me, is what helps then bring the promise of AI alive. Way less training and the time to value for a business. Because today, when you do hear people talk about, am I getting value yet? Such a huge amount goes into training and collecting data. So much of what we're doing is trying to narrow that down so you get that value faster.
Now, as you mentioned, you unveiled a new high-precision, hyper-local weather forecasting system, the next step in your acquisition of the Weather Channel. You've unveiled a new design for your quantum computers. All of these things sound cool, but how do they add to IBM's bottom line?
Yes. So look, the discussion about weather, as you know, we are the weather app on your phones. Almost every phone around, when you hit weather, that's us. That's a very good business as well. And when we talk about AI for clients, data, you have to prepare the data. That's a very good business. All the data, the analytics, and then the AI on top of it. And quantum, I think what you're asking is, what's the time frame till quantum really produces commercial results? And we're probably in a 2 to 5 year time frame that you'll actually start to see commercial businesses doing real commercial applications, and then that means revenue.
So how many quantum computers do you expect to sell in, say, the next 2 years?
Yeah, that is a very good question, because don't think of them that way. These quantum systems are a capability you offer on the cloud. And so it's really about, today, 7 million experiments have already been done. It's worth noting, because what quantum does, it doesn't replace other kinds of computing. The reason it's on a cloud, by the way, is it operates at something colder than outer space. And so we'll offer it via the cloud. Today, 7 million experiments, over 100,000 different people preparing. And what we introduced today when we say it's a system is that, yes, real humans can operate, manage, write programs to it. There's languages that are out on open source. You know, we've been going through a phase to prepare everyone for this. And then ExxonMobil joined us and talked about the work they're already starting about how to more effectively think of it as create different kinds of fuel, different kind of chemistry. Because what quantum's going to get at for business is anything you do today that's approximated. And I don't think people realize how much things like drug discovery, that's why there's wet labs. You can't literally model these things yet. And that's what we'll get to. So when you say how many will you sell, it's really about usage, because it's offered over the cloud, and that's how it will be. And as I said, already 7 million experiments. There's a network formed. By the way, people are beginning to pay for that. And then the real issue is in the usage and what you get then.
Trade talks, Ginny, are ongoing, and we are starting to see some real impacts on U.S. businesses. Even Apple blaming poor iPhone sales in China in part on trade tensions. IBM doesn't manufacture in China, but how is the broader macroeconomic downturn and the trade war impacting IBM?
Yes. So just, kind of a big picture on trade. I've spent a lot of time, and we all really do believe the trade ought to be fair trade, responsible trade, in what's out there. And so we would always prefer people to engage in a dialogue and resolve these issues, because trade is good for all of us. And in fact, it creates jobs. I think history shows it creates jobs for all of us. And so what I've seen here, I have actually begun to see a difference in how clients are looking at what they want to accomplish with technology. So if I looked over a long arc of time, Emily, you'd see a lot of focus on just innovation. I do see a much more balanced requirement from clients now on both innovation and productivity. And I think that's in response to an uncertain environment.
So you were on the President's Strategy and Business Council. That council disbanded, but at the time you said you wanted to continue to engage with the government on important issues like taxes, like immigration. On the day the president is scheduled to give a primetime address at the border, have you found engaging with the administration to be productive?
Yeah, look, I've always believed in, no matter what government, including our own, it's about engagement on policies, and we've had really productive engagement on things like skills and education, and really have accomplished some great things, something called the Perkins Act. And this is all about creating a society where you really value skills, not just diplomas, and that requires a lot of policy change, because if you kind of roll back to your initial questions to me on technology, the #1 issue for, I believe, our society right now is skills. And it's retraining, and then people coming out with fresh skills, having them be right. It's why there's 7 million open jobs, 6 million people looking, but not a match in skills. And so we have found, I think, a very receptive audience in trying to advance things like apprenticeships, the policy things all around education, so that to put focus on how do you get an environment where people can participate in new tech, and that it does not always require a 4-year college degree. And so I talked a bit about this, more than a bit about this, at CES, and in fact introduced a lot of IBMers. We call them new collar. It's not blue collar, not white collar, non-traditional, a firefighter, someone who was a barista, someone who was a 6-year high school. We've got 200 of these going on. And so that's an example of an area that I have found this to be a very productive discussion.
Now, there's been a lot of volatility in big tech, hundreds of billions of dollars wiped off the market caps of Apple, of Facebook. Even IBM has been hit. What is your outlook for market sentiment, investor sentiment around big tech in 2019?
Yes. Well, I'll certainly let you work on the market sentiment piece. I will really kind of circle back to my point on, though, what I see clients wanting, and therefore what does the big tech, what are they looking for people to do? And I look to a year ahead of us that I think we are going to see clients, when they deploy their tech dollars, they're going to want solutions that bring them both productivity and bring them innovation. And this is one of the best, that's one of the best things I think IBM does, is allow and work on both sides of that equation.
We'll bring you more from our CES interview with IBM CEO Ginny Rometty later in the show. Well, Facebook got a vote of confidence from JP Morgan Tuesday. The firm called the social network one of its 2019 best ideas, despite negative investor sentiment over data privacy, telling clients that a, quote, compelling valuation and accelerating earnings growth will help the stock move past its scandals and controversies. Coming up, Samsung falls in line with global tech stocks and its biggest competitor, Apple, after reporting an earnings miss in the fourth quarter. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Samsung is feeling Apple's pain. Quarterly profit and sales missed estimates at the South Korean conglomerate, trade tensions, and a slowdown in China hitting Samsung's memory chip business. It happened in the same period, of course, that Apple reported anemic sales in China. For more, I want to bring in Bloomberg Tech's Alistair Barr and Selena Wang. So obviously Apple is a big customer of Samsung, but Samsung also perhaps vulnerable to what's happening in the broader economy, what's happening in the trade war. Selena, what are the highlights of what they told us today?
Right, it's not just Apple, it's overall slowing demand. So there's a couple of things going on here. There's a memory chip business that's really been suffering. There's been weaker demand across the board as well as lower prices. And the second part of it is their stagnating smartphone market. So they're dealing with stiffer competition, stagnant innovation, and they're really betting on the next phone model of Samsung, which will include 5G technologies. They have this foldable smartphone that's supposed to come out this year. But on the memory chip business, it's really hurting them because Apple, of course, is a key customer, and they've really lowered their guidance for the year. There's also the trade tensions that are hurting demand for these companies overall that would be buying their memory chips for everything from PCs, servers, smartphones, etc.
And the memory chip business is actually, the lion's share of their profit. Alistair, does it seem like Apple has been hurt more than Samsung?
I think it has because I think the slowdown in China has been a lot sharper than people expected in recent months, and Apple really depends on iPhone sales, especially high-end ones in China. Samsung is a much broader based company. They benefit a lot from cloud spending from the likes of Google and Microsoft when they need servers to boost their cloud services. They buy a lot of memory chips from Samsung. That market is also slowing down a lot, but maybe in about a year's time there's going to be an inventory correction, and analysts are hopeful that market will firm up in about a year.
I have a chart here in the Bloomberg showing Samsung's revenue as a percentage of Korean GDP. Obviously, it's a huge company. It impacts the Korean economy. Selena, talk to us a little bit about how the trade talks and potential progress there could impact a company like this and its fortunes.
Well, I mean, we're just hearing today that negotiations are constructive, they're going well, but it's important to remember that these are still very early days. These are just mid-level discussions. Everyone's working towards that March 1st deadline, but it still seems very far from a truce being actually reached here. And overall, we're seeing that the trade tensions are impacting the U.S. and the Chinese economies. And so that's really elevating the incentives of both sides to reach a deal. And that really hurts Samsung because, as we were talking about earlier, they really have their tentacles all across the technology industry. And the broader hit on Chinese consumer sentiment, the broader slowdown in their economy, that's all weakening demand for overall technology products, and memory chips being the lion's share of Samsung's profits. That's really where we're seeing it get hit.
Meantime, we just spoke with Qualcomm President Cristiano Amon, who actually said that they're not seeing a pronounced slowdown in China. Take a listen to what he had to say.
As far as our business is concerned, since we're not really impacted, since we're not part of the new Apple phones, as far as our business, we can't really, we're not in a position right now to be providing financial guidance. But I'll say we're happy with China. China has been a very good story for Qualcomm, and we expect that to continue to be.
So that's interesting given obviously what Apple has reported, now what we've heard from Samsung, and also, Bank of America came out with a note saying that we may be seeing a sort of informal boycott among Chinese consumers of U.S. products. How do we square all of this conflicting information?
Well, if that idea is true, then you have Android-based phones from the likes of Huawei and Vivo and those types of companies, and Qualcomm is really the main provider to any type of company that is making an Android phone. And so if indeed iPhones are being shunned for whatever reason in China, then that could indeed bode well for Android phones and of course for Qualcomm as well.
Meantime, you have Tim Cook out there on CNBC defending Apple, saying that he thinks the Apple ecosystem is underappreciated. He's someone that you don't hear from often. What do you make of the fact that he is out there, trying to tamper this bad news?
Well, I think the decline in the shares really quite shocked investors, and I think the revenue miss was quite a shock too. So he has to get out there and defend the company for sure. And really, from an actual operating perspective, Apple is doing very, very, very well, very solidly. The big question that I always have is that a lot is riding on the new services business, and really Apple has not exhibited any evidence that an Apple video service, for instance, will do any better than Netflix. There's going to be some tie-in with Apple devices, but it's unclear how that works. I think that's the real big question mark still.
Meantime, Samsung is indicating they think the rest of the year will be better as new smartphones launch. Also, of course, this year we're watching the rollout of 5G. Take a listen to what the CEO of LG had to say about that.
There's always a headwind, especially in the smartphone market. As you mentioned earlier, the market is getting more and more penetrated, so less and less people want the same kind of phone all over again. But I'm hoping and I believe that 5G is going to be that turning point.
Do you think 5G could really be a turning point?
I recently spoke with Samsung's chief innovation officer, and something he kept on repeating over and over again was all the innovations that could be built on top of 5G. Now, Samsung also creates not just smartphones, but all of these sort of connected home devices, and they want one software suite to speak from your phone to your refrigerator to your thermometer. So Samsung has a pretty grand plan of how they want all their internet-connected devices to work together. Now, in the first half of the year, as you mentioned earlier, it's expected to continue to have muted demand, but they're really betting that in the second half of the year, as they have these new smartphone rollouts, as 5G is further implemented, they can really capitalize on that and hopefully increase their consumer electronics businesses as well as their memory chip sales.
But of course, we've reported that Apple isn't betting on 5G, at least this year. Before we go, I do want to talk about another story. Sarah Fryer, our colleague, writing this story that on Samsung phones, if Facebook is preloaded, you cannot delete Facebook. What?
So this is a little bit more nuanced than that, but essentially, obviously privacy advocates, consumers overall, everybody is much more concerned about what type of data are these services taking from me. These are not free products. What are they getting from the app even when I'm not logged in? And what happened is that in the early days, Facebook, and not just Facebook, other companies as well, have struck deals with various phone providers, many Android phones, to have pre-installed apps on some of those devices. And the very important questions that Sarah raises in the story is, if you can't delete these apps, what type of data are they getting by nature of being on your phone? And she's spoken to many very frustrated customers of these phones saying, I really want to get Facebook off of my phone and I just simply can't delete it. And it's a very frustrating conundrum, and making it even funnier is that many of them are complaining about this on Twitter.
Facebook is saying that it behaves as if you deleted it, though that doesn't necessarily inspire trust given everything that's happened over the last year. Selena Wang, Alistair Barr, thank you both for stopping by. Coming up, Tesla board member Larry Ellison increases his stake in the car maker, now making him the second biggest investor after Elon Musk. And Bloomberg Tech live streaming on Twitter. Check us out at Technology. Follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. The founder of Oracle has taken a $1 billion stake in Tesla. Larry Ellison revealed the investment in a filing with regulators. He's a longtime friend of Tesla CEO Elon Musk. Last month, Ellison joined the electric car maker's board in an attempt to show that directors are providing effective oversight. Daimler will start selling a heavy-duty truck in the U.S. this year that can brake, accelerate, and steer on its own. The truck's rollout will coincide with the launch of a semi-truck by electric car leader, Tesla, and that will stoke competition at a time when demand in North America is expected to soften. Sales of the PS4 gaming console are slowing down as the product nears the end of its life cycle. Sony reported the company sold 5.6 million PS4s between November 19th and the end of the year. During the crucial holiday season, the numbers imply it may miss its annual target. Coming up, more highlights from CES, including our interview with IBM CEO Ginni Rometty. Plus, Verizon is determined to win the race in 5G. Our chat with Verizon CEO Hans Vestberg from CES later this hour. This is Bloomberg. Technology, I'm Emily Chang in San Francisco. Back to our top story, IBM CEO Ginni Rometty delivering the opening day keynote at CES in Las Vegas. Rometty has spoken about how big consumer tech companies need to do better when it comes to building user trust. But IBM's Weather Channel app is being sued for misleading users about the kinds of data it gathered. I asked Rometty how IBM's approach to consumer data differs from the likes of Facebook and Google.
As you can imagine, I've been very strong on this, and we are very clear and firm about how we responsibly are the steward of customers' data. And when it comes to the weather app, we are very transparent with the data you opt in that we collect and very clear about the policy. It's very simple, by the way, to deal with. But I think the other point that most people don't understand, and a big difference, if you ever noticed on your weather app, we don't have your name. You don't give us your name. You don't log in. There's no credentials associated. So really, this is about getting weather at a location. So that phone is getting what a weather app is for where that phone is. So I think that pretty much says it all.
So do you think that there's fundamentally something wrong or misleading about the business models of some of these other companies like Facebook and Google?
Look, I think what you have to be, and again, at CES, I got to spend time on this morning. As we bring in these new technologies, one of the things I talked about was skills. We just had that conversation. Is one of the most important things. But the other thing to steward them safely in is being really principled about the usage of data. And so on one hand, it's the purpose. I'll put that aside. And the second is on the ownership of data and its derivative insights. You just have to be clear about what those are. And so that people know, and I think I start with the point that the value of that belongs to the owner. And that, therefore, you're very clear with what you get in return for it. And so it's about living up to a set of principles and being clear about what they are. And that's what I think the entire industry does need to do and be clear about. As well, take it then one step further, because we're entering an era where things like AI, you've got to be able to explain it. How did it make a decision? What data trained it? You've got to be sure it's not biased. So these are all layered on top of each other. And I just think it's incumbent, and I would always prefer for every company to step up to their responsibilities to those voluntarily.
You mentioned the apprenticeships that you're doing to close the skills gap. At the same time, IBM is facing several lawsuits about age discrimination, about firing older workers. Are you concerned that this is impacting your reputation, impacting your ability to attract new talent?
Now, we get 7,000 resumes a day. And in fact, as a company 108 years old, what we've gone through is how to update and reskill our entire population. And this has always, always been about skills. In fact, there is not a difference in age. And I was just sharing with my colleagues, we were comparing notes earlier today. I said of all of our reskilling, there's actually no difference in age on how people do in this topic. And so this is not about age. This is about people having contemporary skills. And at 7,000 resumes a day, we are getting the best talent that's out there.
So IBM bought Red Hat in a massive deal valued at $34 billion. Are you confident there won't be another bidder between now and when the deal is expected to close?
Well, look, we're moving along just as we plan on this. I think what we did here is a very fair evaluation, and as we've been through all of that, and we're very complimentary with Red Hat. So I think that's got a lot to do, and it's a good value proposition both for their shareholders, but more than anything, I have to tell you, we've heard from so many clients. In fact, I heard it from all the clients I was with this morning about what a positive transaction this is for them. So this isn't just about whether it's us or Red Hat. It is what together we bring, and both the complementary nature, and for Red Hat to grow what it needs as well, which we bring a lot of services, and then the ability to handle in depth those top clients, which for a growing company, that's actually a roadblock for them. And so together, we really, I think 1 + 1 is 3 in this kind of situation, and it's progressing as we think it should.
With all of this tech volatility, that could also mean opportunity, lower valuations. Will we see you make more big acquisitions?
Well, look, we are right now have all our focus on this one. Doesn't mean, as we say, I think even when I did the announcement, we will certainly continue to keep open, keep looking at things, you bet. So I'm very comfortable with our capital allocation plan.
Now, you're talking today about how, some of these, more futuristic technologies are actually arriving, are practically impacting business. So paint the picture for me. What does IBM look like in, let's say, 5 years?
I think what you will see IBM look like, think of it in 3 pillars. It's both about technology innovation, which, by the way, today we were also, for the 26th year in a row, #1 patent innovator. Technology innovation, but married with the industry expertise and underpinned by trust and security. So we will continue to be the one that, for the enterprise, both works on mission critical work, but really, as I think you and I have talked about this, it's very focused on taking data and how that will transform any company. And that we're at the very beginning of that. You can tell by all of the discussions that are out there. It will be, as you go back in time, and when we step back and look at longer arcs, there was a whole era driven in technology by processing, and everybody's back office got better. That went on for decades. We've been through a period now, which will continue, about this network effect. You talked about a number of new companies being born. This next era is going to get driven by expertise, and that's all driven by data, and that will pervade every single thing that you do. And this is really this expertise idea, and whether it's AI or forms of blockchain, the technologies will keep changing and adding on to this, but it will be who's got that expertise. That's what we will be the best at.
Our conversation there with IBM CEO Ginny Rometty at CES in Las Vegas. Coming up, we continue our coverage out of CES, catching up with Bob Pittman, CEO of iHeartMedia, about the health of the company and the future of advertising on radio. Plus, SoftBank betting big on WeWork again, but not as big as expected. Why the conglomerate stepped back on a controlling stake. This is Bloomberg. Last month, iHeartMedia and Clear Channel finalized their long-anticipated divorce that will see Clear Channel spun out when iHeart emerges from bankruptcy early this year. The goal for iHeartMedia is to emerge as a leaner company that can capitalize on its dominance in radio broadcasting and as an attractive target for a potential buyer. Bloomberg's Vonnie Quinn caught up with the CEO and chair of iHeart, Bob Pittman, to talk about the health of his company.
There are 2 aspects to it. I think one of them really doesn't have to do with bankruptcy, which is that splitting the outdoor company from the iHeartMedia segment, which is primarily audio, allows us to align the companies better for investors. Because what we found was, the investors that really love outdoor are not necessarily the ones that really love audio, and vice versa. So we've now got some pure plays for them. And I think from an operating standpoint, we've actually done, remarkably well, even with the high debt load. But I think having a balance sheet which finally matches the operating performance of the business is certainly gives us a lot of opportunities and lets us take advantage of opportunities more quickly as they crop up.
Now, you mentioned how radio is such a trusted medium, but it also needs advertising, and I'm curious as to your thoughts on the future of advertising on radio and that trajectory for iHeart.
Sure. If you think about in the macro picture, technology really hurt the TV business with the consumer and the advertiser. With radio, it actually helped us with the consumer. Alexa, we're now on 250 platforms, digital radio, et cetera. But it did hurt us with advertisers because no one wanted to buy advertising, or not as many people wanted to buy advertising the way they traditionally had. It's, Google and Facebook ushered in a whole new era of data, really reaching consumers, finding where they are, measuring attribution. So the past 3 years for us have been building out that tech stack and our capabilities to match that, and we have been rolling them out this year, and we'll sort of finish that rollout in 2019, so that now technology helps us with advertisers as well as the consumer.
Bob, how open to being acquired would you be, or to fitting into a larger entity? And if you had your one wish for 2019, what entity might that be?
Well, look, for us, I think we've got a great future running as iHeart, so I'm not looking at that, and that's not certainly on a wish list anywhere. However, we do recognize that once this capital structure is fixed, that we're attractive to a lot of companies, and there are a lot of companies, I think, that want to partner with us and look for ways to be involved with us, and I think it's understandable, and I guess it's flattering.
iHeart Media CEO and Chairman there, Bob Pittman. Sticking with CES, 5G, of course, a continuing topic of discussion. And while we're still more than a year away from a fully functioning 5G network, Verizon is working to pump up its speed to differentiate itself from others. We caught up with Verizon CEO Hans Vestberg to talk about the race to 5G. Take a listen.
I think that we had prepared ourselves for a long time for doing the 5G home, which is our first use case of 5G. We did that in 4 cities only in the beginning, and that's where we still are, in those 4 cities. The customers were they're happy, and they're staying with the business, and we actually are getting better performance than we expected. So we're very happy with that. And as soon as we get the next generation of equipment, basically the home routers, we will continue the rollout of the 5G home. So we're very happy with the outcome so far.
Eventually, this will go national as well. Just step back for a moment, Hans, and give us a sense of, for end users, what does 5G network mean for their existing experience versus new services that they'll be able to tap?
I think that what we need to realize that 4G to 5G is a quantum leap when it comes to speed, throughput, and latency. And many of the sort of capacities of 5G are also very catered for industries. But if you're a consumer, you're going to see a total different type of throughput. I mean, we're going to see gigabits of throughput instead of megabits of throughput when you go to 5G. We call it the 5G ultra wideband. For example, in the 5G home right now, I mean, we are committing to minimum 300 megabits per second at the home with wireless, and we see much higher numbers. Of course, it's a very much a different throughput on the wireless network compared to 4G. So, but the whole ecosystem has to be there, the infrastructure which we're building, and then of course the handsets or the CPEs for the home, etc. So we're now working on that, and we're going to roll out quite a lot here in the first half year of 2019 when it comes to smartphones.
That all sounds very exciting for consumers. My question to you, though, is AT&T, your competitor, plans to introduce an interim 5G e-service to mark the transition towards 5G. To what extent does that set perhaps false expectations for mobile customers and their understanding of what 5G can entail?
I think what I'm going to talk about here at CES is about the 8 different capacities. I call it currencies that 5G is sort of giving in the future, where we actually are building out the whole network. We are building all our network to be prepared for delivering those 8 currencies. And we want our customers to feel that that's a quantum leap from 4G. We want them to feel the same as when they went from the 3G phone to a 4G phone, but this is going to be even bigger. And of course, we work with enterprises because they're going to benefit from it, and society at large, because some of the things that 5G is bringing out is lower power consumption, maybe 1/10 of what we're doing on the 4G network. So there's so many other things, and that's what we're building the network for, to actually be enabling all those type of capacities of the 5G network.
Hans, you're talking a lot about the infrastructure needs, the building needs, and Scarlett brings up a great point that it's almost you against AT&T, whereas when we look across to China, for example, they've got a national focus on 5G infrastructure, on 5G use, on winning the battle for 5G ahead of the US. Is there a risk that this free market focus that the US has will leave you behind China?
we have a Verizon focus, and I'm very confident that's going to be the best focus and the focus that's going to be the number one in the world. We were first on the 5G. We're going to continue that strike. We've always been on the leading edge on technology. We have been working with 5G for many years already. We have built our network because there's so many more things you need to do than only having the equipment and smartphone. You need a lot of fiber. You need to densify your network. You need a real estate close to our customers. So all of that we have been building for years. So no, I'm not worried about that. I'm very focused on having Verizon in number one position. That's my work.
Verizon CEO Hans Vestberg there from CES. Still ahead, formerly known as About.com, digital publisher Dotdash is taking the M&A route. How the company is transforming one of the oldest sites on the web into a network of brands. This is Bloomberg. SoftBank is detailing its bet on WeWork. The Japanese conglomerate announced Monday it's investing an additional $2 billion in the co-working startup, a step back from the $16 billion investment that would have given SoftBank a controlling stake over WeWork. The startup also said Tuesday it is rebranding itself as the We Company. Here to discuss, Bloomberg's Mark Millian. So obviously, $2 billion is a big step back from $16 billion, but they've already invested $8 billion. What does this signal?
It signals that SoftBank can't do everything it wants to do. Late last year, they had floated this plan, like, we're going to take over WeWork. We want to be wholly invested in this business. We want an ownership stake. And then the stock market went haywire. SoftBank shares in particular have taken a dive, 20% just in the last month. And their giant $100 billion vision fund, investors in that weren't too stoked on this deal, so they couldn't get it done with that huge amount of cash, and so they did what they could with the money that they had available to them.
Does it also signal skepticism about WeWork, or the We Company, I should say?
Certainly, there must be investors in the Vision Fund that don't have full confidence in WeWork, at least in terms of like doing a full takeover. But we should also remember that SoftBank now has put something like $10 billion into this company, which is a lot of money, and it's a big vote of confidence in the business, which has been expanding very rapidly, still losing a lot of money, but they're buying up a lot of leases and buildings and doing some interesting things.
Right, but let's talk about some of WeWork's challenges. I mean, rents are going down.
Yes,
right?
This is a business that really has only existed in a bull market, in a market where, real estate prices have only been going up. So now we're starting to see, and the CEO of WeWork in an interview with Fast Company said that they're seeing declines in leasing prices in almost every market.
And pushback from landlords.
Pushback from landlords, which we've written about. They've sort of grown to this size where they can no longer kind of maneuver around the edges of the real estate business. They are, in Manhattan, for example, they are the biggest leaser of commercial real estate.
So as part of the We Company, there is WeWork, which is the office rental business, We Live, which is communally designed apartments, so they only have a couple of those so far, and also yes. We Grow. They run an elementary school in New York. How optimistic are investors about these other two lines of business, which sound good?
Yeah, it's a mix.
But are still small.
For a lot of people who invest in private technology companies, they're very optimistic people. And so the prospect of some dudes who have no experience in schooling to like go and reinvent the elementary school, there are people who do believe in that. And clearly the CEO is signaling here by trying to change his name, although they haven't formally changed their name to the very ridiculous We Company. They're trying to signal that they want to be more than just a co-working business.
All right. Mark Millian, Bloomberg Tech, thanks so much. Keep us posted on the We Company's evolution. Okay, last year, IAC's once mighty About.com got a new name, Dotdash. The rebranding took the 18-year-old site and transformed it into a network of verticals with topics ranging from health and food to personal finance. And now it is taking on beauty. Dotdash announced 2 new acquisitions. Clinique's digital beauty brand Birdie, and women's lifestyle property My Domain. Bloomberg's deals reporter Ed Hammond sat down with Dotdash CEO Neil Vogel to discuss.
I think what you see in beauty in particular is a lot of the other sites are just really junked up. There's too many ads and they're too slow. And we build sites that have fewer ads than all the competitors, great content, and they're really fast. So it's a very simple mix.
Now, concurrent with you guys doing the deal, there's also some news around Dotdash becoming essentially standalone in a way it reports numbers under the IAC auspices.
Yeah, we've done pretty well. Again, we started with sort of the kernel that was once about.com. About.com, a lot of you people know, 1996, founded. I mean, at one point we were the oldest, worst site on the internet that had any worthwhile content whatsoever. But we took from that kernel, we've spun out a bunch of brands in health, finance and personal finance, tech, travel, home and food, and we're adding beauty to that mix. I think we've done fairly well over the past couple of years with this transition, so IAC is going to now highlight us in their earnings. I think the first quarter, or the fourth quarter announcement they're going to make is going to include us as a separate entity for the first time.
Now, historically, when IAC has done that with its portfolio companies, they've gone on to become public companies eventually down the IPO route. What's the timeline for Dotdash to IPO?
I think you'll hear Joey, who I know you've spoken to, our CEO, my boss, speak about this. There is never a timeline with IAC. I think part of the reason Dotdash has worked is because at a time when when it feels like every other publisher is struggling. Guys raised too much money, had a bunch of bad ideas, or not doing so hot, guys that can't make the transition from legacy. We had all of those issues, but we had patience and we had time. And IAC had patience and time to let us turn this into a very viable publisher, and what I think is probably the most exciting publisher in the business now. There's no timeline for this. I think this is a small acquisition. I think it's a signal to the market of where we're headed with this. I think there's a lot of optimism around what we can do in publishing. I think the narrative around the market is wrong.
Which is what? Because the narrative around the market is essentially advertising-based revenue model in the publishing industry is broken, and yet that is the Dotdash model. So how do you improve on it?
So it's interesting. I think there's a lot of people that are overthinking this. I think we're doing really well for advertisers because we have websites that have really great content that people trust, that are really fast, that actually have fewer ads than all of their competitors. That makes advertising that performs really well. I mean, the problem we had with Dotdash before we got in and fixed it was we had no leverage over our traffic sources and we had no leverage over our advertisers. Well, how do you get leverage over advertisers? You put forth an offering that performs. So when you have great content and you have fewer ads, all of a sudden those ads do really well, particularly when you're our kind of content, which is explainer, very targeted, intent-driven content. Our ads perform great. People want to buy ads from us. It works. It's not that complicated. You make really beautiful content on sites without too many ads that are really fast. People like that, and it just works.
And the eyeballs have gone up. You've gone from, I think, about 50 million to about 80 million in a year.
I think at our low, we were in the mid-40s in ComScore, mid-40 million users a month, according to ComScore, which is the measurement device. We were probably lower. I'm not sure they measured us right. I think in the most recent month, we're in the mid-80s.
All right, so let's talk about the other lever that you can pull to bring in revenue, which is e-commerce.
Yes.
Particularly with these beauty acquisitions, does that open the door to sort of selling products, or at least sort of linking through to sites that do sell those products and taking revenue there?
So everything we do is based on trust. People have to trust our content. And in the categories we're in, finance, health, home, food, people have to, it's a small trust, like I trust you to help me with this recipe, or a lot of trust. I trust you to help me treat my diabetes, but it's trust. That lends itself really well towards commerce. So we can talk about things in very specific articles about commerce and help people decide what to buy, and then they can click through and buy them. It's an affiliate commerce model. We've had a lot of success with it. I think in beauty, there's obviously if you're helping somebody with an insulin pump, it's a little bit of different stakes than if you're like figuring out what makeup to do smoky eyes with. But we have a real opportunity to recommend to people who trust us things that they can buy.
Neil Vogel there, CEO of Dotdash, with our deals reporter Ed Hammond. And that does it for this edition of Bloomberg Technology. We are, of course, live streaming on Twitter. You can check us out at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.